I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. Tuesday, November 2nd, and we've got three markets for you today: soybeans, oats, and feeder cattle. Before we jump into the markets and the charts, I do want to bring to your attention our YouTube page. If you like the YouTube content and the video content that we put out on a daily basis, be sure to subscribe by going to our YouTube page, Blue Line Futures, and hitting this big red subscribe button. That way you'll get alerts whenever we put out a new video. Likely get to you before it gets to your email inbox. So without further ado, we'll jump into the markets. We've got the January soybean chart pulled up here, and this has been a little bit of a quiet market as of late. So why are we bringing this up? Well, we're bringing this up for a simple reason. We've been in a downtrend for the better part of the last several months, and there's a lot of bearish fundamentals in this marketplace. But the inability for the market to break lower with a lot of bearish headwinds is a little bit of a caution flag for the shorts. It has every reason to break and can't break. Again, a caution flag for the shorts, and right up against trendline resistance. If for whatever reason we're to break out above here, that could open the door for an extended move higher and a potential run back to that $13 handle. Now, in conjunction with the soybeans, we're watching corn as well. Recently, there's been a lot of spreading, long corn, short beans. Today, we saw that unwind a little bit, selling corn, buying beans. If that trend continues into tomorrow's session in the back half of the week, potentially that could be the catalyst to give the market a technical breakout despite other fundamental headwinds that linger for soybeans right now. Now, moving over to the oat market, again, something that we don't cover that often, but a wild ride here today. We traded in about a 55-cent range, and you can't really even tell on the daily chart because we've just been straight up. But I do want to chop this down into a 1-minute chart so you can just see how wild things were here on the open. We're trading near 780. We sold off to about 724 and then rallied all the way back to 760 by the end of the day. And we've had a lot of people approach us about wanting to trade oats because it's moving. And we always, caution people, just because the market's moving doesn't mean that you need to trade it, especially a thinly traded market like oats. As you can see here, the thinly traded market gets very volatile, and volatility feeds on itself and can blow up a trading account, and that's not what you want to do. And during this choppy trade here today, the bid and offers were as wide as 8 cents. So you could sell it 8 cents lower or buy it 8 cents higher. That's not the market environment you want to be in. You want to resist the FOMO, or the fear of missing out, and just be a spectator in some of those more thinly traded markets. Now, moving over and wrapping things up with the feeder cattle market, we've got January feeders here, and yesterday was an ugly day. There's no real way to spin that, but there was a silver lining at the end of yesterday's session, and we'll pull it up here on the 5-minute chart. Yesterday, we had this peak panic capitulation-like flush where we sold off about $2.50, rallied all the way back into the final minutes of trade, and today we got follow through to the upside, which is very encouraging, and I think really keeps the ball in the bull's court into tomorrow's session. Some of the key Fibonacci retracement levels that we're looking at going forward, 158, 159, but I think more importantly, the 50% retracement up near 162, and the 100-day moving average isn't on here, but it comes in right around 162 as well. So that's the near-term upside objective, so long as we can continue to keep this strength rolling upwards. And before we sign off, I want to bring to your attention also, we do have a Facebook group where we update some of these charts intraday. It's called Ag Chat Without the BS, and we posted the feeder cattle chart yesterday afternoon and kind of posed the question here: will the capitulation help mark a near-term low? So far, what we saw today after yesterday's capitulation, yes. So a near-term low is in the making, and we think there's upside in feeder cattle going forward. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures from the Chicago Board of Trade. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.